Good day, everybody. This is Robert Harper at Farm Bureau's Grain Division, bringing you the Merchandiser Minute for Friday, October the 5th, 2018, where we've had a lot of green on the board this week and a very positive week of trade. I think when you look back over at what caught the eye of most traders this week, when we look at the news, we got to go back till Sunday. The United States, Canada, Mexico agreement, the United States, Mexico, Canada agreement was signed in. We've got one less question mark in the marketplace, and we're going to have some more tariff-free trade with Canada, Mexico, and the U.S. Trilateral. We saw rain all week in the Corn Belt. It kept the combines parked in the Western Belt and in the Northern Belt. We didn't see hedge pressure. That helped our prices. We got some new numbers out of Brazil this week on their intentions on soybean planting. Remember, they started planting in Brazil on September the 15th, and when you convert their hectare estimates to acres, it looks like it's going to fall somewhere around 89 million acres in Brazil. Keep your eye on that. Managed money came into the week this week short all three commodities that we work with, corn, wheat, and beans. And we saw something today in the U.S. jobs report. We've seen unemployment now hit a 49-year low at 3.7%. Phenomenal. When President Trump looks across many areas of our economy, he has got a lot to say that his policies are working. Agriculture is a little different, but in other ways, he definitely can see that. Crude oil hit a 4-year high this week. We had the dollar futures rally back to 95, and we saw equities also hitting recent highs. When we go to Chicago and look at your prices, December corn was up 12 cents for the week to close at $3.68. November soybeans, your new crop contract closed at $8.69. That's up 24 cents a bushel for the week. An excellent week of trade. The December wheat, the spot month contract closed at $5.21, up 11 cents. We had a lot of news this week out of Russia, kind of back and forth about how much wheat they're going to be exporting. That was positive to price action. And certainly the cattle on feed report that we had that shows 11 million calves in the feed yard. That's the highest number ever recorded since 1996 when they've been keeping the data. That was really strong for corn. It's a lot of calves to eat corn, and certainly the Canada deal is helping us on that. USDA's got the corn harvest at 26%, the bean harvest at 23% across the country. That's dead on where we should be. It did a great job, got a quarter of the crop out in September. But with the rain delays this week and the 10-day forecast looking like rain delays next week, we're probably going to really see that harvest pace slow down here. We had great export sales this week. Our top buyers, Mexico, Canada, Argentina, and unknown. So that was exciting to see. Looking towards next week, remember the WASDE report and crop production report from USDA will come out on October the 11th at noon. Most people in the trade feel like the USDA is going to increase the yield for both beans and corn. That could be negative to price on Thursday. We've got another announcement coming from President Trump on Tuesday the 9th. He's traveling to Council Bluffs, Iowa, and he'll be making an ethanol industry announcement. Hopefully that will be positive to price action. Keep your eye on South American planting. Watch the harvest progress next week. Give us a call if we can help you to talk about local basis and local markets. And please stay safe in the field. This is Robert with Virginia Farm Bureau's Grain Division.